terms in accounting. 1. Entity. Business entity means a specifically identifiable business entity or accounting entity. Mahabazar, Hindustan Unilever Limited, Ratnagiri Enterprises, Kalyani Publications, etc. 2. Transaction. Transaction is an incidence connecting some value between two entities. The transaction can be sale of items, receipt of cash, payment against loan, payment of salary, etc. It can be a cash transaction or credit transaction. Assets. Assets are economic resources having value and owned, possessed or controlled in monetary terms by an entity. Assets are items with value used by a business for regular operations. In the balance sheet, these items will appear on the asset side. Cash in hand, bank deposit, stock, machinery, furniture, motor vehicle, etc. are the examples of assets. 4. Liabilities. Liabilities are obligations, also known as debts, of an entity which has to clear in future. Amount payable to creditors, bank loan, outstanding expenses are examples of liabilities. 5. Capital. Own investment in a business is the capital. The capital may be brought to the business in the form of cash, materials, assets, etc. Capital is an obligation to the business as the same has claim on assets and shown on the liability side in the balance sheet. 6. Any amount or items withdrew by the owner of business is called drawings. The drawings will reduce the total capital investment in the business. 7. Goods. The products in which an entity is dealing is goods, in the terms of which it is buying and selling or producing and selling. 8. Purchases. The total amount of goods procured by a business for cash or on credit for its use or sale is purchases. In a trading entity, finished goods are purchased for resale with or without processing. With regard to a manufacturing concern, the raw materials are purchased, make into finished goods by production process and keep ready for sale. There will be cash purchases and credit purchases. 9. Sales. Sales are total revenues from goods or services provided to customers. Sales may be cash sales or credit sales. 10. Revenue. Revenue is the amount earned by the business by sale of its products or provide the service to customers. Other revenue items to business are interest, dividend, commission, royalty, rent received, etc. Revenue is also known as income. 11. Expenses. Expenses are the cost incurred by the business in the process of earning its revenue. The examples of expenses are salary, wages, rent, depreciation, lighting and heating, traveling, etc. The benefits of expenses will exhaust within a year. 12. Expenditure. Spending money or incurring liabilities for any property or service received is known as expenditure. Purchase of machinery, furniture, motor vehicle are examples of expenditure. The benefits of expenditure will not get exhausted within 1 year. 13. Profit. Profit is excess of revenues over the related expenses during an accounting year. Profit increases the capital of a business. 14. Gain. Gain is profit received by transactions related to assets, increase in the value of assets, also known as appreciation, etc. 15. Discount. Discount is a deduction in the value of goods sold. The discount is of two types. At the time of selling the goods and if there is deduction in the value of goods, such discount is called trade discount. After sale of goods and while receiving payment, any deduction allows on the payment by the receiver is called cash discount. 16. Stock. Stock, also known as inventory, is those goods that are left unsold in the business at the end of the year. In accounting, the stock left at the end of financial year is closing stock. Stock at the beginning of the accounting year is termed as opening stock. 17. Debtors. Debtors are persons or entities who owe an amount to an enterprise for buying of goods or services on credit basis. The total of such balance at the end of an accounting year is termed as sundry debtors. (19) Creditors. Creditors are persons or entities who have the obligation to pay amount to enterprise for the goods and services received on credit basis. The total of such amount at the end of an accounting year is termed as sundry creditors. 20. Vouchers. The documentary evidence in support of a business transaction is known as voucher. In accounting, there are cash or bank for checks, receipt vouchers, cash or bank for checks, payment vouchers, journal vouchers, etc.
Please don't forget to subscribe.